What is going on, guys? Quality Trades here, and today we are going to be covering the basics of the stock market, hence the name of the title, Stock Market 101. Let's get right into it. So, what is the stock market? The stock market is a platform where investors buy and sell shares of publicly traded companies. It allows companies to raise capital by selling ownership stakes, and it gives investors the opportunity to own a piece of these companies. Right, so what is a stock? A stock represents ownership in a company. For example, when you buy a share of a stock, you're buying a share of that company. Best example, if you buy a share of Apple, you now own a tiny part of Apple. Dividends. So, what are dividends? Dividends are payments made by a company to its shareholders, usually from profits. The best example of a dividend stock would be AT&T because of the crazy high dividend yield they offer at around 6% each year. Now, what does that mean? That means that however much money you put in, you are guaranteed 6% payout from just the dividends alone, not including the stock price. So, how does the stock market actually work? The stock market is an exchange. It's an exchange of a marketplace where stocks are bought and sold. Think about a flea market or a farmer's market. One guy's selling apples over here for $4. One guy's selling apples over here for $3. Us as investors, we want to find those opportunities for the $3 apples rather than the $4 apples. Because if you buy a lot of them, the price will definitely add up. So now, what are the exchanges? The major exchanges would include the New York Stock Exchange and the NASDAQ. These would be the big flea markets that are basically having the flea market. Now, investors place orders through brokers who execute the trades on the stock exchanges. So, the exchanges themselves are the flea markets. The brokers are the vendors at the flea market offering the $4 apples or the $3 apples. Now, buying and selling stocks. There are two order types that we're going to be covering today, the most common ones, which would be market orders, which are executed immediately at the current price, and limit orders are only executed at specific prices. Now, what does this mean? A market order is, I want to buy this stock now, so I'm buying it now. Your order will get filled right away. But a limit order is saying, let's say Apple is at 180, but you're like, oh, I'm not paying $180 for Apple stock. I'm going to wait until $150 to buy it. So what would we do? We would put a limit order at 150 Apple, and if the price ends up going down to 150, our limit order will activate, and now we will now be in the stock. So depending on how you want to invest, short-term, mid-term, long-term, it's very, very crucial that you understand the difference between a market order and a limit order. So why would you invest in the stock market? And then there's a lot of reasons. The first would be potential for growth. Stocks have the potential to grow in value over time, which can increase your wealth. And who wouldn't want to be more wealthy? Income through dividends. Some stocks provide regular income through dividends. Like the example earlier, AT&T, although the stock price consolidates a lot, it does offer that high dividend, which many investors find good. And also diversification. This would be the best way to overall risk manage your account without actually putting a stop loss or anything advanced such as that. Diversification is good because you have a bunch of stocks in your portfolio rather than just one. So if one stock goes up and another one trades evenly, you're going to be up. Or you have 5 stocks in your portfolio and you have 3 that are going up, 2 that are going down. You're still going to be up because you diversified your portfolio. Now, the risks of investing in the stock market. A lot of people don't like talking about the risk, but this is very important. So, market volatility. Stock prices can be volatile and fluctuate based on market conditions. And this can be, anything. Company performance. The value of a stock depends on the performance of the company. Bad performance can lead to losses. If a company doesn't perform how it was expected to perform on earnings, we could see a dramatic drop off in price very fast. And last but not least, economic factors. Economic downturns and global events can impact stock prices. For example, the most recent one, COVID-19. The stock market took a dramatic dip once COVID was a thing. But then it eventually came up and broke all-time highs. So now I know this is a lot of information to take in. I know it's a lot, but where do you begin? You start by educating yourself like you're doing now. Learn as much as you can about investing and the stock market as a whole. Start small. Begin with a small investment to get a feel for how the market works. Don't just put all of your money in the stock market right away. Don't do that. You don't need to. Start small. There's no need to rush it. And also, just opening a brokerage account. That is how you begin. Open a brokerage account, dibble dabble, start buying a little bit of stock. Nothing crazy. Like I said, start small, but just get familiar with the platform and the broker itself. Now, from all of that information you just heard, I would say these are the key points that you should focus on. Educating yourself consistently. You always need to be learning in the stock market. Why is that? Because it is always changing. It is never going to stay the same. Another thing, starting small. Like I was saying, I can't stress this enough. Guys, start small. I started big when I first started trading, and I lost all of my money. It's not fun. Guys, just start small. And then I would say, get familiar with how your broker works. You need to know the ins and outs of your broker. You need to be familiar with it so you know how to execute accordingly. And the last, and I would say probably, if not the most important, is being patient. I'm working on this myself. I've been having a really tough time recently being patient. And I would say this is, once you learn a lot about the market, you know what to do, it just becomes about being patient, waiting for the right moments, and not trading when you don't need to. For those of you who made it to the end of the video, thank you so much for watching, tuning in. I hope you guys learned a lot. Please subscribe, please like, please comment, and I'll see you guys in the next one.